Hey everyone, it's Zeb. If you're into crypto like I am, 2025 hasn't been a party for most coins. Bitcoin's been chilling, but Ethereum and a lot of altcoins, they've been taking a beating. Today, we're diving into the why, the how, and the what next of this crazy crypto market. So, buckle up, hit that like button for the algorithm, and let's break this thing down. Alright, so let's get real for a second. When we talk about the crypto market, it's about sentiment, people's feelings, their confidence, or lack thereof, in the future of this space. And right now, sentiment is in the dumps, especially beyond Bitcoin. Look at this chart showing the total market cap of all cryptocurrencies. It gives us a big picture view of how much money is actually flowing in and out of this market. Now you might be thinking, Zeb, the market cap hasn't crashed that hard. And you'd be right, it hasn't totally tanked, but here's the kicker: investor sentiment is about as low as it was back in the depths of the 2023 bear market. We're talking serious fear, uncertainty, and doubt creeping in. So what's the deal? Why is sentiment so low when the market cap isn't telling the whole story? To understand that, we need to look at what traditionally moves the crypto market. Think of it like this. The crypto market, for all its decentralization and revolutionary potential, still operates within the larger global financial system. Alright, so we just talked about how the Federal Reserve, with its interest rate hikes and quantitative tightening, can suck the liquidity out of the market, making it harder for risk assets like crypto to thrive. But here's the paradox. Despite the Fed's best efforts, global liquidity has actually been increasing. This is real data showing how much money is sloshing around the global financial system. And as you can see, it's been on an upward trend since 2023. So, we've got the Fed hitting the brakes, trying to slow things down, but at the same time, there's more money out there than ever before. Now you might be thinking, Zeb, if there's all this extra money floating around, shouldn't that be good for crypto? Shouldn't everything be going up? And you'd think so, right? More money in the system usually means more money looking for a place to go. And crypto, with its potential for massive returns, seems like the perfect spot. But here's the catch: that liquidity, it's not being distributed evenly. Remember how I said Bitcoin has been holding up relatively well compared to Ethereum and the altcoins? Well, this is a big part of the reason why. Bitcoin, see, it's like the OG of crypto. It's the most established, the most recognized, and for a lot of institutional investors, it's the only game in town. So, when this new liquidity enters the market, it's Bitcoin that gets the lion's share. They park their money in Bitcoin, driving up the price, while Ethereum and the altcoins are left fighting over the scraps. Okay, so we've covered how global liquidity is flowing primarily into Bitcoin, leaving altcoins out in the cold. But there's more to this story, a whole other layer of complexity that's specific to the altcoin market itself. And that's what we're going to unpack right now. See, the altcoin market, it's a different beast altogether. It's like the Wild West out there. Thousands of projects, each promising to revolutionize the world in their own special way. Some of them are legit, with real use cases and dedicated teams building something meaningful. But let's be honest, a lot of them, they're just hype, riding the coattails of Bitcoin's success and hoping to cash in on the next big trend. And this, my friends, is where things get really messy. Remember all that liquidity we talked about, the money flowing into Bitcoin? Well, some of it trickles down to the altcoin market, but it's often driven by speculation, by FOMO, by the fear of missing out on the next big pump. And when you combine that kind of speculative frenzy with leverage, well, that's when things can go from bad to worse real quick. Leverage, in case you're not familiar, is basically borrowing money to amplify your bets. It's like putting your entire net worth on black at the roulette table. You can win big, but you can also lose everything just as fast. And in the altcoin market, leverage is everywhere. And this, my friends, is how a small dip can quickly turn into a full-blown crash. Chapter 4. Are there too many altcoins? Okay, so we've talked about leverage and how it can amplify losses in the altcoin market. But there's another factor at play here, something that's been a growing concern for a while now. And that's the sheer number of altcoins in existence. Seriously, it's like every day there's a new token, a new project, a new promise of life-changing returns. Don't get me wrong, innovation is great, it's what drives progress, but at some point you have to ask yourself, are we reaching a saturation point? Because here's the thing, every new altcoin, every new token, it's competing for the same finite pool of liquidity. It's like dividing up a pie into smaller and smaller slices, and when you have thousands of altcoins all vying for attention, it becomes incredibly difficult for investors to separate the wheat from the chaff, to identify the projects with real potential from the ones that are just noise. Now you might be thinking, Zeb, isn't that just the nature of a free market? The best projects will rise to the top and the rest will fade away. And in an ideal world, sure, that's how it should work. But the crypto market, it's not always rational. Remember the meme coin craze? Projects with no real use case, no utility, just a funny name and a catchy meme, were attracting billions of dollars in investment. And while the meme coin hype has cooled down somewhat, it highlights a crucial issue. Liquidity in the altcoin market can be incredibly sticky. Chapter 5. When will altcoins recover? Alright, so we've covered a lot of ground here, from global liquidity to leverage to the oversaturation of the altcoin market. And I know what you're thinking. Zeb, this is all pretty doom and gloom. Is there any hope for altcoins? Will they ever recover? And that's the million-dollar question, isn't it? The truth is, no one knows for sure what the future holds. The crypto market is volatile, it's unpredictable, and it's constantly evolving, but that doesn't mean we can't make some educated guesses based on what we've seen in the past and what we know about the current market dynamics. So let's talk about some potential catalysts for an altcoin recovery, some things that could shift the market sentiment and bring back the bulls. First and foremost, we need to see a change in the overall market structure. Right now, as we've discussed, the altcoin market is fragmented, it's illiquid, and it's dominated by speculation. For a sustained recovery to take hold, we need to see more institutional involvement, more regulatory clarity, and a greater focus on projects with real-world utility. Now, this might sound like a tall order, but there are signs that things are starting to move in the right direction. Regulators around the world are finally starting to take crypto seriously, working on frameworks that provide clarity and protect investors without stifling innovation. Institutional players, while still cautious, are increasingly dipping their toes into the altcoin waters, exploring the potential of DeFi, NFTs, and other emerging technologies. And perhaps most importantly, we're starting to see a shift in focus from hype to utility. Investors are becoming more discerning, looking beyond the flashy marketing and the promises of overnight riches. Chapter 6. Which altcoins will benefit the most? Alright, so we've talked about the factors that could drive a broader altcoin market recovery. But let's get specific. If the market does turn around, which altcoins are best positioned to benefit? Now remember, I'm not a financial advisor and this isn't investment advice. This is just my own personal analysis based on my understanding of the market and the trends I'm seeing. First up, we have to talk about Ethereum. Love it or hate it, Ethereum is the 800-pound gorilla in the altcoin room. It's the most established smart contract platform, with a massive developer community and a thriving ecosystem of decentralized applications. Despite its recent struggles, Ethereum remains the most liquid and secure network for building and deploying decentralized applications. And with the upcoming transition to Ethereum 2.0, which promises to address many of the network's current limitations, Ethereum could be poised for a major comeback. One area where Ethereum could see significant growth is in the realm of tokenized real-world assets. Imagine a world where everything from stocks and bonds to real estate and art can be represented on the blockchain as digital tokens. This would unlock trillions of dollars in illiquid assets, making them more accessible, transparent, and tradable. And Ethereum, with its robust security and established infrastructure, is well positioned to become the leading platform for this emerging asset class. Another area to watch is decentralized finance, or DeFi. Chapter 7, the future of crypto, your thoughts? So there you have it. We've covered a lot of ground today, from the macro factors influencing the crypto market to the specific challenges and opportunities facing altcoins. The crypto market is constantly evolving, and predicting the future is impossible. But by understanding the underlying trends and the factors driving market movements, we can make more informed decisions and position ourselves for success.